Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Scott Kefer, Senior Portfolio Manager with VictoryShares and Solutions, to discuss an investment approach into the digital asset space. Scott, it's great to see you again. Welcome back to Trade Talks.
Thank you, Jill. It's great to be back.
All right, and in June, Victory announced plans to enter the crypto market through an exclusive agreement with Nasdaq and Hashdex. You've since launched a private fund for accredited investors that tracks the Nasdaq Crypto Index. What can you tell us about that partnership and your firm's path to launching this new fund?
Sure. So for those not familiar with Victory, we're a diversified, innovative asset management company. We have over 160 billion in assets under management. And we've really been watching the digital asset space now for a few years. And while we're big believers in the asset class and the potential unique opportunity it represents for investors, in the early going, when we were first looking at it, it really lacked the liquidity, the trusted custody options, and really that broad-based investor participation that we felt was needed to bring a digital asset product to market. So while we're still in the early innings, when you fast forward today, we think a lot of rapid changes occurred. And earlier this year, we were speaking with our partners at Nasdaq, and they introduced us to the NCI, which is the Nasdaq Crypto Index. And not only did we feel the timing was better and the timing was right, but we felt Nasdaq had really designed a very compelling index that has the potential to become the definitive index for crypto assets. So as you said, in June, we were excited to announce we'd be launching a private fund for accredited investors. This fund is going to track the Nasdaq Crypto Index, the NCI, and it's going to be managed by our partners at Hashdex, who are a global leader in digital assets and really the largest crypto-focused asset manager in Latin America.
Scott, let's talk about the methodology behind the Nasdaq Crypto Index. What makes it so compelling?
Sure. So the NCI is designed to track a diverse basket of digital assets. And when you think about what's available in the market now, a lot of them really focus on a single coin. Oftentimes that's Bitcoin. We believe the asset class is much bigger than Bitcoin, and a multi-coin approach, a diverse basket as the NCI represents, is a far more prudent way to get broad exposure to an emerging asset class. But really the NCI has three core principles that we really felt aligned with our way of thinking. First, it's representative, really representative of the entire digital asset market. So again, through that multi-coin exposure that they then cap weight. So it's designed to represent, again, the whole market, not just a bet on a single coin. Second principle is really around institutional investability. The Nasdaq Crypto Index Committee has really integrated a really robust set of eligibility criteria for index inclusion. And this is going to include everything from liquidity, the exchanges they trade on, and custody standards for each of the assets. So just as quick perspective, there are over 11,000 tokens in the market right now. Currently, only 8 meet Nasdaq's high standards of investability. And then last is that the index be adaptable. And this is such a dynamic and emerging asset class. It's important that the index adapts as the market continues to evolve. So this index reconstitutes quarterly, which we think allows it to capture this.
Scott, you've been a technology sector specialist as an active manager for over 25 years. Are there any similarities or parallels that you've seen with the evolution of technology and what we're now seeing in the digital asset space?
Yeah, that's a great question. In terms of parallels, all the great disruptive tech platforms that I've observed, and when I entered the industry, we were moving from mainframes to client servers and PCs. I watched the introduction of network computing and the internet, smartphones. They each had really three common characteristics. They improved efficiency, they reduced cost, and they enhanced productivity. And digital assets, and really it's the blockchain technology that underpins it, absolutely possess these three characteristics. But when I think about the two things that I think really set this technology platform apart that didn't exist in some of the platforms prior, this platform has decentralized authority and it enables smart contracts. And what do I mean by that? Well, crypto is decentralized, and this is incredibly powerful. Everything runs on this public blockchain or a public ledger. There's no single core authority. There's no big bank. There's no big business. There's no big internet company that sort of sits in the middle, sets the rules, governs the platform, and looks to profit from it. So for example, when you think about Bitcoin, I can send and share Bitcoins with a friend. Increasingly, I can transact, purchase goods and services. You see what's going on in El Salvador right now. There's no middleman in a Bitcoin transaction. I don't need my wire transfer or my check to clear through a bank. I don't need to pay through a Visa or MasterCard network. There's no PayPal or Venmo involved. The transaction simply gets validated on a public exchange, public ledger, no middleman. And this is really powerful. It reduces cost, improves efficiency. And then the second thing is it enables smart contracts. And this is where blockchains like Ethereum come into play, where a smart contract is going to allow all the terms and the conditions between two parties to be coded directly into the blockchain. You can kind of think of it as almost programmable money. And once that contract's obligations are met, the contract can be executed instantly. And the benefits are that it really allows the ability for automation of workflow. You can automatically enforce the contract terms. Ultimately, it's all about speed, efficiency, transparency, and again, cost savings. So there are lots of applications for this across lots of different industries, from financial services, supply chain management, the way we manage the rights around art, media as well.
And Scott, where do crypto assets fit in one's portfolio? What are some of the investment considerations we should make?
Yeah, sure. So, despite my enthusiasm for the technology and its outlook for the long term, it's important to remember it's a new asset class. It's an emerging technology. Investors need to weigh the risks and the rewards against their own risk tolerances. But we absolutely see a compelling asset class. This as a really compelling asset class for most investors. Even over its short history, the asset class has shown to have a low correlation to other assets like stocks and bonds. There's a strong argument that it can act as a store of value to hedge against inflation, similar to gold. But maybe the most compelling is simply its potential to be a value creation, the value creation it can offer by providing exposure to this emerging technology. And additionally, while past performance is no guarantee of future results, our work does show that even a small allocation of 1 to 5% in Bitcoin over the last 5 years, it would have enhanced risk-adjusted returns of a traditional 60-40 portfolio. So lastly, in terms of other considerations, as I mentioned, Victory's crypto fund is only available for accredited investors. But what we hear from investors that we speak to, they want liquid vehicles. They want vehicles that provide an easy and seamless way to invest, but that also remove, that complexity and the security risks that are challenging when you attempt to invest in this asset class directly on your own. And there are a handful of competitors that we face in the market that also offer funds to accredited investors. A couple of things investors should consider there when making comparisons. Look at whether the fund, first and foremost, is it a single coin solution or a multi-coin exposure, something we've talked a lot about. Second, and maybe most importantly, is liquidity. Our fund offers daily subscription and redemption requests. Many of the competitors out there are only monthly, quarterly subscriptions, or they offer the ability to trade over the counter, but then you run into potential premiums and discounts to the actual NAV of the assets. And then lastly, just pay attention to fees. They tend to fall in a pretty wide range among the offerings that are out there.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.